Snowflake encountered substantial challenges that pushed its shares to lows in 2022. However, the winds have shifted and the company experienced a turnaround. Let's take a look. Thomas, the headwinds that drove Snowflake shares to their 2022 lows began to recede earlier this year, and we're here to unpack that. But by the way, Snowflake is a cloud-based data storage, computing, and analytics company. For those that are new to the stock, this was a new one for me, so I'm excited to dive into this. But with Snowflake's persistent outperformance and improved guidance, analyst sentiments have noticeably shifted. So we saw that this year began with a cautious approach, but now we're kind of witnessing a trend of increasing target prices and revised expectations. So Thomas, tell us, how did Snowflake's performance influence this turnaround in analyst sentiment, and what kind of pivotal factors are contributing to this momentum shift?
Yeah, right. We really are witnessing like a sentiment play in Snowflake. So over the last year or so, sentiment was dampened by fears of slowing growth, not because it wasn't going to grow or produce profits, but slowing growth. So they were dialing back their expectations. And the company is experiencing slowing growth, but it's also persistently outperforming expectations and raising guidance, which is helping the analysts shift their sentiment back into bullish mode. They never reduce their ratings from buy to hold or even to reduce, but that downward pressure on the price target kind of pressured the stock price lower again. And so now with the analysts raising their targets again, we have a tailwind for the market. So what I'm seeing on the charts is that this stock overextended and dislocated from reality, but now reality is back into play. The reality is that Snow is a solid AI cloud company with growth in the forecast and solid market support.
All right, so Thomas, what about the sell-side activity? You had mentioned this in your article for MarketBeat. Should investors be alarmed? And I guess if you would here, maybe give me a quick refresher on when this type of activity can be a cause for concern and when it's not something to worry about.
Well, so there's two angles at play here with the with the sell side. On the one hand, we have insiders and institutions which have been selling on balance for the last quarter or so. They've been helping to cap the market, and the combined impact of that is a range-bound stock. Now, on the other hand, we have the analysts who are raising their targets. They're providing some support. I don't think right now this is a worry. I think it's more of a roadblock that'll be passed soon. The results and the analyst activity suggest that the bullish interest has been peaked again. And I would expect to see the institutions either stop selling into the rally and possibly begin buying the stock again.
All right, good to know. Talk to us, if you would, about the technical indicators here. What do they suggest about Snowflake stock movement? And what key resistant levels are highlighted here? How might breaking these levels impact the stock trajectory?
Well, you can see that Snowflake is clearly range bound here. We've got some analysts support at the bottom of the range. Institutions and insiders have been selling up here. Right now, the critical resistance point is near 195 to the 205 range. That's this area right here. And if you'll see, this marks the midpoint of a range that I think is going to unfold over the next year. This resistance area is a critical point that, if broken, should lead the market to rally. And based on technical factors, we would expect the rally to be equal to the magnitude of the range that came before. This range is worth $75. So I would think that the stock, if it breaks above this critical point, would advance another $75. That puts it up in the range of 260, 265, which aligns with some of the newest analyst targets. So I see this as a very viable target. We're just waiting for the market to confirm the rally and break above that critical resistance point.
All right, considering the recent performance, are there any key factors that investors should closely monitor here in the coming months to assess the future growth potential?
Right. So I think the next major catalyst will be in the next earnings report. We're going to want to see client growth and penetration continue. So far, we're seeing that in a very solid net retention rate. So we have a lot of new revenue coming from old customers as well as new customers coming into the fold. Because I know that Don wants us to talk about this, the net retention rate is the amount of revenue coming from existing customers compared to last year. So in this case, existing customer revenue was worth 135% of last year's existing customer revenue, showing that old customers are buying and paying for more services.
All right, well, this remains to be a compelling story for sure. So thank you for covering this one with us, Thomas. To everyone watching, leave us a comment down below. Maybe include a snowflake emoji with it if you watch until the end. That might be kind of fun. I don't know. But we will be right back here at Market Beat for more stock analysis. Until then, we'll see you next time.